What's up, everybody? Welcome to the Stocks channel. My name is Cory, and in tonight's episode, we're gonna answer the following questions. Should I buy the dip? Will this selling continue? And am I still bullish on the stock market? So first up, let's go ahead and take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, let's go ahead and start out by saying that panic selling is not a trading strategy. So let's just go ahead and get that out of the way now. If you're going to get in this game, you cannot panic, and you have to understand why you're getting into a stock and what your exit strategy is going to be. Panic selling is the absolute best way to lose money the fastest. So if you're panic selling, you're going to lose money. So first up, let's take a look at the price action on the SPY ETF. We see we did go down negative 0.9% today, and we did close below the 5 EMA. Now, closing below the 5 EMA is not a great sign, but we're still way above the 13 EMA on the SPY ETF. We could still find support at that level right around 364, and we do have the gap, which could also act as support right around 363. So there is a possibility that we could go a little bit lower before finding support, but there's really not a ton of downside left before we have considerable support levels. We also have the previous breakout of the previous all-time high at 362.8. So there's 3 support levels that SPY can still go to, and the 20 simple moving average is also coming up into this area where we could also find support. Now, the next thing we want to look at is the trend. Is this trend still bullish? Absolutely. All of these moving averages are still stacked to the bull side, and we still have a really strong bullish trend, which is still going to continue to push price higher. So one day doesn't set a trend, and one day of selling is not going to break this bull market. Now, do I think the selling is going to continue? Usually sell-offs like this last anywhere between 1 to 3 days. But the magnitude of the sell-off could mean that we're going to start heading back higher sooner rather than later. Most of these sell-offs are usually technically related because things got too overbought and they just needed to cool off. One day of selling could absolutely cool off the technicals, and we can continue to head higher. So yes, I am still bullish on the S&P 500 and the stock market as a whole, and my price target on the SPY ETF remains up here at $377. So I am labeling the stock market as a buy the dip market, and you want to try to buy off these support levels. So watch anywhere between 365 and 363 as possible support on the SPY ETF. We still have a really strong bullish trend with the 20 simple moving average coming up in that area. And if we start breaking below the 20 simple moving average, it will start to look like a more bearish chart. But until the price action proves to us that this is going into a bear trend, we're not going to just try to call a top and predict a top for no absolute good reason. We're following the price action, and we're following the trend, and we're remaining bullish. Next up is the Nasdaq 100 Triple Qs ETF, and we see the Nasdaq went down over negative 2.2%, and we did find support at the 13 EMA on the Triple Qs ETF. We also came down and closed that gap right around that $300 level, and we did find support because we closed back above the 13 EMA. So we did get that intraday bounce, and we didn't close on the low of the day. We actually bounced a little bit from the low and closed higher. So the price action is now below the 5 EMA, but remember what I said last night. We had 10 days in a row of an increase all above the 5 EMA. The stock market cannot go up every single day. So when the stock market goes up 10 days in a row, it's called taking the stairs up and the elevator down. It's a very common theme in the stock market to go up slowly and then give a lot of it back in one quick move. So this isn't necessarily a bearish day, it's just a healthy correction to the longer term bull market. Now, if we start breaking and closing below the 13 EMA, we could find support at the 20 simple moving average, which is right around $298. The same thing I said with the S&P 500 will also apply to the Nasdaq 100. If we start closing below the 20 simple moving average, that will be our first indication that this market could be going bear. But right now we're trading above the 13 EMA, and we still have a very strong bullish trend. And you can see that the 20 simple moving average is still positive sloping, and it's going to continue to push price higher. The closer the price action gets to the 20 simple moving average, the more force is pushed upward on the price, and we're going to continue heading higher. So on the Nasdaq 100, my price target remains at 312, and I still think we're going to see that this month. So I see this as a short-term sell-off in a longer-term bull market. Therefore, I'm labeling this as a buy the dip. Next up is the Dow Jones DIA ETF, and we see the Dow Jones not actually looking very bearish today, closing right on that 5 EMA and finding support intraday at that $300 support level. So when you look at this price action and you look at the trend, there's no reason to be bearish on the Dow Jones. The price action is looking really good, and the bull trend is looking really strong. So we're going to continue to expect to find support on the DIA ETF somewhere around $300, and down here around $297 to $298 if we start closing below 300. Same thing I said with the other two indices. We need to start closing below the 20 simple moving average before I'm even going to consider getting bearish on this market. So all three indices held up pretty well on price action and still have very strong bull trends, So it's not like we're just going to break that overnight. We would need some very significant selling to continue tomorrow to start breaking any of these bull trends. Next up is the ARK ETF. And as we know with ARK, it does have over 10% Tesla, and Tesla didn't have the greatest day today. So we did see some significant selling going down negative 1.79%. But again, look at the price action. We're closing above the 5 EMA, and intraday we found support right at that 5 EMA and bounced and closed higher. That is not bearish price action. Yes, we had a down day, but a down day does not set a trend, and one day of selling is not going to turn a bull market into a bear market. We also hit my price target resistance level at 125, and we were trading just above that level intraday, and that started the sell-off. So we were in a very critical resistance area, and we were getting into that area while being overbought. Getting into resistance levels while being overbought is absolutely a recipe for a technical sell-off, and this sell-off did not surprise me in the least bit. If you watched last night's video, you know I was already giving a PSA for all you bulls out there saying don't be in weekly options going into an overbought market. So hopefully those of you that watched my video last night heeded my advice and actually did something about the leverage that you're carrying into today. If you went in today with a leverage portfolio, you had an absolute terrible day. If you went in today with a lot of cash on the sidelines, you had an absolute Black Friday shopping spree and you're buying up the fire sale. So put yourselves in positions where you're trimming your profits, and it's okay to have some cash on the sidelines waiting for days like today so you can go buy some of your favorite stocks at discount. So hopefully some of you took my message to heart yesterday and had some cash, and hopefully you did some buying today. Remember, there is the Stocks Channel Discord where I give advice and I give suggestions like this every single day. And you can find out how to join the Stocks Channel Discord in the link of the video below. So on the ARK ETF, we're still holding up above support at 118.7, which is the 5 EMA, and we could still come lower and close the gap at 117 and find support at our support trend line around 116. So there is some downside left, but this is still a strong bullish trend, and we're still seeing some very bullish price action. So on ARK, I'm also calling it a buy the dip, and I'm expecting us to get back up to the 125 price target with no problem. Again, that is a resistance level, and we could start slowing down on this bull market again when we start getting back up into those levels. On the VIX, which is our fear indicator, we did see the VIX go up over 7.6%, which is to be expected when the S&P 500 is selling off. I'm lowering our support level down to 20 on the VIX because we are finding support at that level, and we did bounce off that level. So we are seeing a little bit of volatility spike today, but the question is the volatility going to continue to increase, or was this just a one-day event? So we still see the 5 EMA below the 13, and we do see the price action closing above all the moving averages except for the 50 EMA. So we still have a bear trend in the short term, and the price action is still trading somewhat in a bearish way where we're still below the 50 EMA. So right now, I'm going to go ahead and say that I don't expect to see the VIX continue to head higher. This could have just been a one-day sell-off and a lot of volatility and a lot of panic from the increase in selling when a lot of people were getting complacent, but that doesn't mean that the selling has to continue. So we'll continue to watch the VIX, but there is a resistance level right at that 50 EMA, which coincides with our previous resistance at 24.8. So we could still see a little bit more selling in the market, but it's not likely to continue for any more than 1 to 3 days, and we already had our first day of pain. Next up is the US dollar, which did seem like it found a bottom, but never really bounced in any meaningful way. So it doesn't look like the dollar is going to break the bear trend that it's in, and this is a very strong bear trend. So it does look like the dollar just has a dead cat bounce, and it's going to continue to head lower. And remember, I always say a weak dollar is a strong stock market. So the short-term bounce in the dollar looks like it should be ending soon, and stocks should continue to start heading higher. On gold, we did see a little bit of profit taking today, but we did have this really nice impulsive move, and I would consider a dip in gold as a buying opportunity. I am expecting to see the dollar continue to weaken and head lower, and a weak dollar should be bullish for the gold market. So this looks like a good opportunity to start scaling into gold. We see the 5 EMA did cross above to the bull side, and we are starting to develop some bullish momentum on the trend. So if gold can start to bounce off of these moving averages and find support and break back above 1860, we could be heading to 1930 in a flash. Next up on silver, we see a very similar sign with a little bit of selling today, but still holding up around the moving averages and trying to find support and look for a possible bounce to our next resistance level to 25. Silver's looking a little better than gold because you can see it never actually broke out of its consolidation that it's in, and it's been trading between $25 and 22.6 for quite a few months now. So when silver finally does break out to the upside, it should be a very bullish move and it could start to run. On Bitcoin, we're still consolidating and we're still hanging around the 20 simple moving average, and the bulls are hanging on for dear life because that 5 EMA is still not crossing below the 13 EMA. So we're starting to get some confluence in this area where all of the moving averages are bundling up. So Bitcoin is about to make a big move to the upside or the downside. We do see a little bit of increase in volume, so Bitcoin could be positioning itself to break right through 19.6 thousand and start heading to my next price target. So if we break back above 19.6, our next price target is $21.2 thousand. If we do start breaking down to the downside, look for support at the 50 EMA, which is somewhere around 16.5 thousand. There is a lot of people getting bearish on Bitcoin, and usually the general population is wrong about stocks and about Bitcoin. So if a lot of people are betting for Bitcoin to go lower, I almost want to take the stance that Bitcoin is going to start heading higher. So watch Bitcoin very closely because it could be telling us there's a big move coming very soon. Next up is Apple, our market moving stock. And we did see Apple was breaking above our resistance level at 124 intraday, but we got flushed out and closed down just above the 13 EMA. Again, you can see the price action got to the 13 EMA, found support, and bounced intraday and closed higher. That is somewhat bullish to see that we're seeing some intraday bouncing off of these support levels. So it looks like Apple's in a good buy the dip scenario because we're trading near support levels and we always want to buy off support. So if you're an Apple bull, this is the time to start loading up and get ready for a break of 124 and heading to our next price target at 136. You can see Apple still has a really nice strong bullish trend, so I don't expect one day of selling to break Apple's bullish trend that quickly. We're likely just seeing a technical cool off before we start heading higher. On the financial sector, the price action still closing on the 5 EMA, which is bullish, and we still have a really strong bull trend. On industrials, we're closing up over the 5 EMA, and we actually went up 0.22% today. So there's no way you can look at this price action and this trend and call it anything other than bullish. On the healthcare sector, the price action is still above the 5 EMA, and we're only seeing the bullish trend pick up momentum and gain strength. So all three sectors are looking bullish, so I don't expect to see any additional selling because I don't see any weakness in the market. So going back to the S&P 500, you can see there's really nothing to be overly bearish about. We still have a weak dollar and we do have a short-term bounce in the fear indicator, but we did have some selling today, so that's completely normal. All of our sectors are looking bullish and we did see some selling in tech today, but we saw that the financials, industrials, and healthcare sector are still looking very bullish. So we're likely going to see the S&P 500 recover from this day of selling and start heading back higher. So our price target on the S&P 500 SPY ETF remains at $377, and I'm calling this a buy the dip scenario. So this is not a time for you bears to try to short the market. I'm only trying to do you a favor by telling you not to short the market. Trust me, if I thought it was profitable to try to short the market, I would be telling you try to short the market. But I don't see any advantage in trying to short this market or trying to call a top, as it's in a very strong bull trend and we're likely going to continue to head higher. So remember, treat selling and weakness in this market as a buy the dip scenario and get ready for this market to dial up the heat. Alright, our first hot stock of the night is going to be Tesla stock, and we did have a terrible day on Tesla, going down pretty much minus 7%, but we did find support at our previous breakout of resistance at 587. So remember, 647, which we rounded up to 650, was our next price target, and we barely closed above it yesterday. So when we close above a price target, we want to see follow through and we want to see that level hold up. Obviously today we did not see that happen, but we did find support at 587. So as long as Tesla stays above 587, I would look for it to head back to 650 and try to see if it can break above there yet again. If we can break and close above 650 yet again, we're likely gonna head to 690 in no time flat. So it's not too late for the Tesla bulls, but it is starting to look dicey and we are closing below the 5 EMA. But looking at this bullish trend, it's still very strong, and one day of selling in Tesla is not going to stop the momentum. So watch that 587 level as a very strong support, and if we start breaking and closing below 587, you might want to consider the fact that we might have seen a top on Tesla in the short term. However, if we start breaking back up over 650, it's game on and we could be heading straight to 700. On NIO stock, we also saw some selling today, going down pretty much negative 5.5%. But one interesting thing about NIO is we are consolidating after a breakout and we're coming back to that level. So is NIO about to find support somewhere around the $44 level and start exploding higher? On NIO, you need to watch a break of this trend line and we need to start closing above $46, somewhere around 47, and start breaking out over 48 to really start NIO running in a bull market. So going back to a daily chart, I still think we're in wave 4 and I'm not sure that wave 4 is over just yet. So be patient on NIO because we're going to want to wait to see the price action confirm that we're out of wave 4 and we're going bullish again, and we have yet to see that. So we still have possible support levels around 44 here, which is a newfound support ever since we consolidated in that range. But we also have support levels at $41, $39, and the 50 EMA somewhere around $38. So we are getting a lot of support levels in the high 30s and the low 40s. So that's the level I'm looking for wave 4 on NIO to possibly come to an end before we start heading higher into wave 5. If you're going to be a long holder bull on NIO, you probably want to start accumulating a position now because you're in it for the long haul. However, if you're a trader and you're trying to scalp a quick profit, be a little more patient and let's wait to see where this thing's gonna bottom. Next up is Palantir stock, and Palantir had another bad day, going down almost negative 6.9%. Now Palantir is closing right around the 5 EMA, and I still think we're in this ABC correction ever since we had that parabolic move. So it's likely that the C wave is gonna end somewhere around $24, or it's gonna come all the way down back to 21, and we're gonna get a sort of double bottom test of support. So Palantir looks like it could be a buy the dip stock around 24, but don't forget it could go as low as 21 or 18. So we are likely seeing the end of the correction in Palantir very soon. So again, if you're going to be a long-term bull on Palantir, go ahead and start buying in slowly and accumulate as it falls. If you're not a long-term holder of Palantir, just be a little more patient because we're likely going to see where wave C ends very soon. Don't forget resistance levels on Palantir are up here at 29, and we will have another resistance level at 33. If for some reason we start breaking above 33, the next price target above is $36. Next up is Twilio stock, and this is a stock that I'm still extremely bullish on. Twilio held up like an absolute champion today, and it did find support at its previous breakout at about $306, and it did bounce higher and close over the 13 EMA. This stock is an absolute beast, and I'm expecting it to start breaking out higher and testing its previous resistance level at 338 any day now. Once we break 338, my price target on Twilio is going to be all the way up here at $373. You can see that this stock has very bullish price action and a very bullish trend, and it's a great stock to buy on the dips. So this is absolutely a dip because we're just above the 13 EMA again. And you can see last time we closed near the 13 EMA, the next day was explosive to the upside. So I'm looking for Twilio as a buy the dip opportunity, and I'm looking for it to get to 338 in no time flat. Next up is DraftKings stock, and DraftKings stock had an absolute roller coaster of a day because it was up huge before the selling began. So we really need to jump over to a 1 hour chart to see what's going on with DraftKings. And we see we got that breakout of our resistance trend line, and we did test that level as support. Once that support level was confirmed, the bull stepped in a huge way, and we drove the price all the way up from $49 all the way up into the mid 53s. So that was a great time to take some profits because that move was huge and explosive, and it's not likely sustainable. Of course, you know the rest, where the selling came back in and drove the price all the way back down to support. But the good news for the bulls on DraftKings is that support level is obviously holding up. So DraftKings looks like it is a buy the dip stock, and it looks like the support level is going to hold up, and it's likely going to start bouncing higher. So going back to the daily chart, my price target on DraftKings remains $54, and you can see how quickly we can get there because we almost got there today in 1 hour time. So DraftKings is still a hot stock, and we still have a bullish trend and bullish price action. So I'm still looking for DraftKings to hit that $54 price target. Next up is Boeing stock, and this is the absolute best time to be buying Boeing stock because it's sitting right on support at $230 and it's 5 EMA. So you want to buy these high flying stocks while they're cooling off. You don't want to chase the move. So if you don't have it in you to buy Boeing now, don't be trying to buy it later at $250. This is the time you want to buy these stocks while they're weak and while they're dipping and they're sitting on support levels. So you can see the trend on Boeing is extremely strong, and the price action has been very bullish because we continue to close and bounce off of support levels. We're still trading right around that 5 EMA, and I'm looking for Boeing to continue to head higher towards my price target of about $260. Boeing looks like a very strong stock, and it looks like it's gonna start bouncing very soon. Next up is Nvidia stock, and I wanna just do a quick update because I said it could be going into the hot stock category and start running. But it does look like it's starting to get a technical breakdown today, closing below our support level down here around $518. So the Nvidia bulls need to step in very soon and start driving this stock higher, or it's no longer going to be a hot stock because it's going to start heading lower. So the last level of support looks like, if you go to a weekly chart, we're sitting right there on that 20 simple moving average on a weekly chart, which is somewhere right around that $513 level. So Nvidia needs to start bouncing soon, and it needs to start breaking out of this consolidation to remain a hot stock. If Nvidia continues to break down, this is likely going to be the last time you see Nvidia make the hot stocks list. Now remember, there's a lot more hot stocks out there, and we're covering all of them on the Stocks Channel Discord. So if you're interested in that, there is a link in the description of the video on how you can become a member of the Stocks Channel Discord. Remember that panic selling is not a strategy, and I want to protect your profits, so don't be afraid to lock in those gains and raise some cash for buying the dip. Good luck out there, everybody. I hope you're crushing it in this market, and as always, I will see you in the next episode.